Hi, welcome back to the channel. On today's program, we're going to talk about things that your financial planner or advisor wants to know about you. And we'll get into that subject in just a moment. Hi, I'm Gerald Marquith. I'm a certified financial planner. Been in the industry about 30 years, and the channel is dedicated to those under 50 years old, maybe to help teach you things that you should have learned in high school and college, but they never got around to it. So let's kind of get into this subject, what your financial advisor wants to know about you. The first thing we're going to talk about are the numbers. The numbers tell a big story to your advisor, and he or she will ask follow-up questions from that. So what are the three key numbers that we want to know? The first one is your income, gross income in this case, and if you're married, both of your incomes. This is important for the advisor to determine what tax bracket you're in, as it can affect things like capital gains and things of that nature. So you'd want to know what your gross income is. We're not interested in your net income because there could be a lot of other deductions and things of that nature that really aren't pertinent to the conversation here. Number two, we want to know what your liquid net worth is. Now, liquid net worth means monies you can get at fairly quickly, within a day or two. Things like money market funds, bank accounts, CDs, maybe even an index fund or stock, or anything that you could lay your hands on quickly and turn that into cash. Now that's a really important number to know as well, because we want to know just what you have in case of, say, an emergency. Now, do you have lots of money there, or is it just very little that you're working with? Then you might be on the edge, where investing want to be more conservative if you don't have a lot of money available to you at a given moment in time. Finally, we want to know what your total net worth is. Now, total net worth includes your liquid money and things like your house, car, art and collectibles, anything that you might have that would take a little while to sell to raise money. Obviously, you're not going to sell your house in a day and have that money there in the next day. So that would be part of your total net worth, but not your liquid net worth. This is an important number. The total net worth line is really something that you want to try to track during the course of your financial life. Now, I wouldn't recommend you track it every single day, but maybe on a monthly or quarterly basis, you look and see what your total net worth is. In other words, if you sold everything you own, how much money would you have? Many people like to put targets on that of how much money they want to have. They want to have $1 million or 2 million or whatever. Those are things that your advisor is interested in knowing because it tells him or her where you're at. Liken this a little bit like going to a doctor. Imagine you go to your doctor and the doctor says, tell me a little bit about yourself, maybe your previous medical history, where you're at right now. And suppose you as the patient said, it's none of your business. Well, it's going to be kind of hard for your doctor to help you out. And the same thing is true with your advisor. Now, I have had cases in the past where I've started asking questions about these numbers, and the client will say, that's too personal. I'm not going to tell you what I make or how much money I have saved up or anything like that. Well, it's kind of hard to give any sort of advice at all, because how would I know whether the advice I'm giving is proper given your circumstance? So it's something you want to think about before you walk into a meeting with your advisor. They want to know these key numbers so they can kind of tailor their advice towards that. For instance, if you had very little liquid money that we talk about, liquid net worth, I might be inclined initially to think about something more conservative for you. Likewise, one of the questions we're going to ask based off those numbers are, well, what are you focused on? What's your goal with the money you have? Is it retirement? And if so, when do you plan to retire? And beyond that, what will you do in retirement? Because when we talk about retirement, if you're saving money for that, if your goal in retirement is to travel the world every single year, well, you're going to need a lot more money saved than if you're more of a homebody and maybe a few trips here and there. Likewise, they're going to want to know about other goals you might have. Maybe college funding for kids, or maybe getting a car. Any of those sort of things might be money goals that you have. Now, an important question to be asked is, how soon do you need to have this money to be ready and to meet your goal? For instance, if you say, I'm going to retire in 2 years and I think I need $1 million to retire, say you only have $500,000 as an example, now to try to double that money in 2 years is next to impossible, and be a lot of risk in trying to do that. But again, the amount of time that you need to hit a certain number will play a factor in what level of risk your advisor will advise you on. Likewise, in terms of asking the client questions on goals, you want to find out that maybe the debt situation. What is your debt situation? You have credit cards, maybe student loans outstanding, things of that nature. For instance, student loans cannot be done away with even in a bankruptcy. So you want to think about that. Now, that doesn't mean that in a student loan you can't prepay it. You can, of course, but student loans are something that we will certainly want to know about. Credit cards, especially high interest credit cards, we want to try to eliminate those if we can to improve your position, your total net worth as well as your liquid net worth in terms of investing. So all of these questions that we want to know are important. For instance, I might ask a client and say, do you have any trust accounts? Have you done any estate planning, which we had a video on earlier? Tell me a little bit about that. Tell me what your goals are for your children. Do you want to pay off all their college loans? Do you want to help them buy a house? What is it you want to do with the money? And likewise, I would directly say to a client, what exactly do you want me to concentrate on? Is it on retirement planning? Is it on goal planning to get out of debt, say, or even to pay off college loans or student loans? Those are important questions to ask, because until I could understand what you're trying to accomplish, it's really hard for me to figure that out. Likewise, I want to know a bit about your marital status. Single, divorced, married. What does that look like? And again, that can affect your tax rate in terms of that, but also lets me know where you are in terms of the current life that you're living. So these are important things to consider. They're issues that you want to think about walking into that door and talking to an advisor. So when you're thinking about using an advisor, be prepared, because those numbers and those goals are what they are going to focus on ahead of time. Then certainly I would start talking about risk. I might say, it's possible that the markets might go down. What happens if it goes down 20% a year? What are you going to do? Are you going to get out of everything, or are you just going to stay the course? Now, most people get they kind of feel pretty secure about this and say, oh no, if it goes down, I'm fine. Or, no problem at all. I'd want to know why it went down, but basically I'm going to stay the course. That's fine right now until the emotions hit of a down market, and you might change your mind. So you want to think that through very carefully about risk. I want to know, are you a risk taker, or are you generally a conservative person around money? Now, most clients I've talked to will say, I'm conservative around money. Well, conservative could mean 3% money market, or it could mean you're willing to invest in stocks and bonds and a portfolio tailored for you. So those are things you'd want to know, or we would like to know. Likewise, I would ask, how often do you want me to call you about your portfolio? Every 6 months to a year? That's fairly standard. Every 3 months? That might be a bit much, but if you're very focused on this, then maybe a 3-month checkup would be something you'd want to do. I certainly don't want to bother you greatly and say, oh, my advisor's calling again. So you want to be aware of that. Likewise, you could certainly call your advisor at a given moment in time. and say, hey, I'm going to do a big withdrawal, or what do you think about my buying a boat, or something like that. Again, it's important for the advisor to know what you're trying to do and where you are right now in order to reach your goals. Investing is a long-term proposition. It's not for short-term money. So if you tell me I want to buy a car in a year, that's best not to be in risky investments, let's say like stocks. You want to save put more money in things like CDs, safe items like money markets, and try to reach your goal that way. So on our next video, we'll be talking a little bit about questions you should ask your advisor, because that's certainly an important area as well. I hope you've gathered some information on this and that you like and subscribe to the channel and share with those you think might benefit from our brief conversation here today. I look forward to speaking to you in the future. And remember, to invest or not to invest, that is the question. Have a good day.